Wednesday, June 3rd, 2020, Maneco 64, home of alternative economics and contrarian views. Today I want to talk about why I'd rather have a gold milkshake over a dollar milkshake any day of the week. I get a lot of questions from viewers. I see a lot of videos and articles about the dollar milkshake theory, about Brent Johnson, and I've been talking about the fact that the fiat currencies, the dollar included, have been sinking for years. I wrote about it back in 2007. So today I'm going to try to show you why focusing on the dollar versus fiat currencies is, in my opinion, a waste of time and is prejudicial to your savings. Why is it prejudicial? Well, to your savings? Well, because you might think, oh, I've got euros, I've got pounds, I got Aussie dollars, I got Swedish krona. I should go into the dollar because the dollar is going to go up, right? Uh, and I'm going to show you that that hasn't been the case. That gold has been the best milkshake to drink over, well, in the 21st century at least, since 2001. So let's start with this small presentation I prepared. First of all, I want to explain what the dollar index is, of course. So dollar milkshake versus gold milkshake. So the dollar index, the US dollar index, or USDX, DXY, or DX, is an index of the value of the United States dollar relative to a basket of foreign currencies, fiat currencies as well, I would say, often referred to as a basket of U.S. trade partners' currencies. The index goes up when the U.S. dollar gains strength when compared to other currencies. The index is designed, maintained, and published by ICE, Intercontinental Exchange, with the name US Dollar Index, a registered trademark. What about the history of this index? Well, and I think it's always very important to look at the history of things. USDX started in March 1973, soon after the dismantling of the Bretton Woods system. And what happened in 73, they tried to keep the foreign currencies fixed against each other after they went off gold in 71. But it was an impossibility because once you take gold out of the equation, every country starts cheating by printing more money than others. So you can't maintain a fixed exchange rate. And that's why they had to start this dollar index to measure cheating or inflation. Because in the end of the day, inflation is theft. It's a tax. So at the start, the value of the US dollar index was 100. So this is what I want you to focus on. And this is why I think drinking a gold milkshake is a lot better than a dollar milkshake. I'm sorry, Brent Johnson, to pop your bubble. So it says it has since traded as high as 164.72 in February 1985 and as low as 70.698 on March 16th, 2008. So yeah, the dollar has rebounded versus these currencies since 2008. I think we're now around 97, so it has gone up about 30%, I would say, or so. But let's compare how the dollar index, though, has done versus XAU USD since its inception. XAU USD, of course, is gold. That's the mnemonic or foreign exchange symbol for gold, XAU USD. So I took the quarterly chart of the dollar index. It goes back before 1973, mainly because it was extrapolated. They could calculate the index because the basket of currencies that they used to calculate the index in 1973 was still existent prior to that. So they calculated it. But as you can see here, in 1973, in March, it started at 100. And yes, we've had ups and downs, but right now we're at 97.70. This chart was from yesterday. So there you are. After almost 50 years, the dollar relative to the so-called major hard currencies is actually a little lower, almost 50 years later, or 47 years. So just wanted to show you that. And below I've got a chart of XAU USD, a quarterly chart as well. Gold, of course. So you can see when the dollar index started out, gold was below 100. So where are we now in gold? Oh, 17, 20 or thereabouts. So what would you rather have had if you were a foreign investor? Foreign investor, I mean not being in the US, of course, holding Deutschmarks, French francs, eventually euros, Swedish krona, Swiss francs, Japanese yen, Aussie dollars, Canadian dollars. What would you rather have had since 1973? The dollar index or the dollar or gold? I think it's quite self-evident. So let's continue. So for those who like Bloomberg and other financial mainstream media outlets who think that gold and silver are just commodities, well, think again. Reuters, of course, still think gold and silver are currencies or money. I remember very well when I started out in the business in Switzerland in the late 80s. The little bank or private bank I worked for, we did a lot of foreign exchange, and the dealer at the firm I worked for, he always had this page up, the FX page on Reuters. So the white one is an old one because it's still got Deutschmarks, it's still got the French franc, the Dutch guilder, Italian lira, you can see there. The interesting thing though, if you see on the bottom left of this page, you've got XAU and XAG. Well, there you go. It's the price of gold versus the dollar. So gold and silver on a foreign exchange page. And then the other chart, the black chart, you've got the euro is on it. So it's an older one. But gold and silver are still around, of course, as you can see. So just wanted to point that out. Yes, they are commodities, gold and silver, but they're monetary commodities. Don't forget that. Here's another set of data that I got from Incrementum AG. They did a really good report. I put a link to the report below in the description. It's very long. They do it every year. It's called In Gold We Trust. I highly recommend you watch that. But they've put the performance of fiat currencies versus gold in the 21st century. And I think it's very telling. Another reason why you should keep drinking the gold milkshake, in my opinion. And we'll look at the different currencies here. So in euros, gold has gone up on average 9.7% every year since 2001. Gold has gone up even more versus the dollar every year since 2001 by 10.7%. So which currency has actually outperformed versus gold in the 21st century? Is it the euro or the dollar? Well, it's the euro. Versus the British pound, gold is up 12% on average every year since 2001. So the pound hasn't done as well. The pound hasn't done well versus the euro nor the dollar in the last 12 years or so. Aussie dollar, yeah, Aussie dollar has been underperforming all the other fiat currencies recently, but it still has done relatively well over the last 19 or 20 years or so, 9.5%. So you get the idea. Every currency, even the dollar, on average is down about 10.3%, as you can see there on the bottom right of this chart. So another reason not to drink dollar milkshake. So fiat currencies, they're all sinking versus the money and currency of kings. I've talked about this many times. I've been writing about this. As you can see, I used to keep a blog for soundmoney.com. I don't keep that blog anymore. But back in '07, April '07, I wrote about how they were all sinking, and it was part 2 of a series. Unfortunately, I can't find part 1, but I was talking about how they're all going to continue to sink. I'm not going to go over the article. I'll put a link to it in the description if you want to read it. But you can see I've been at this for 13 years. So this is not something new. So to finish off with what's going on in the States, with the riots, and I'm not going to go into the details. I personally think there's a lot of factors involved. Yes, globalists or George Soros might be behind a lot of this, but if people in general, and I'm not talking about races here, I'm talking about people in general, were happy with their lot, I think they wouldn't be so susceptible to doing what they're doing. They'd have no reason to do it, right? So I've actually taken data from the Federal Reserve, the Board of Governors. That's one thing. That's the only thing good that the Federal Reserve does, in my opinion, is keep statistics and data like this. Apart from that, of course, I think we should end the Fed, or the American people have to do it through an act of Congress. And I'm not condoning rioting and looting, but if you were going to riot and loot, I think it should be against the Fed at the Mariner Eccles building in Washington, D.C., or the 33 Liberty Street in Manhattan. That's where people should be, in my opinion, not at Target. So I wanted to look at the wealth distribution in the last 30 years in the United States, because I think that's one of the problems why the society is so divided these days. And I've gone over this already in the last few months. I found out about these statistics actually from Wolf Richter on the Wolf Street Report YouTube channel. I recommend Wolf Richter, and thank you, Wolf. So here we've got distribution of household wealth in the US since 1989. So I've looked at where it was in 1989. So the top 1%, the richest top 1% of Americans own 23.5% of all wealth. The other 9% below that owned 37.2%. So it was about 60%, right? The top 10%. The 50 from 90 owned 35.5%, and the bottom 50% owned only 3.7%. That was in 1989. So we come forward to 2019, last year. You can see that the top 1% did quite well. They've gone up to 32.5%. The 9% below that went to 37.5%, which is actually not much of a difference, only 0.3%. The 50 to 90, they've gone down to 28.6%, so quite a big drop. The most interesting figure for me of this analysis is the fact that the bottom 50, their wealth has dropped from 3.7 down to 1.4. And I guess you could argue there's a lot of ethnic minorities in that bottom 50%. So you can understand why there's more anger in those groups. But then I looked at this. The Fed also did this wealth distribution by race in the last 30 years. And it's really interesting because if you look at whites in 1989, they had 90.7% of all the wealth. And now they have 85.4%. So I was surprised by that statistic there. Really dropped. Blacks, they've gone up from 3.8% to 4.2. I know it's a very small percentage, but it's gone up. And you can see Hispanics have gone from 2.1 to 3.1, and others have gone up quite a bit, 3.4 to 7.3. So I just wanted to put that out there. I think the real problem is really the wealth inequality, and that's what's got to be looked at, not what we're being told today. Even though I'm not saying what happened to George Floyd isn't a bad thing. So there you go. Just wanted to put that out there. Let's finish by looking at the markets. Yeah, the stock market seems to go up no matter what happens. Yeah, we did have a big drop in February, March. And of course, the Fed and the Treasury, Congress, they've pumped all this funny money into the market. Is it going to continue? Well, we've gone through levels that I thought were going to be big resistances, like 24,000, maybe a little higher in the Dow. It's kept going. Yeah, I've been wrong about that. Will we make a new high in the Dow and the S&P? Anything is possible. Yes, it's been frustrating to see gold and silver being kept under the thumb the last few days, but I always try to think of who I'd like to support. And what does that mean? Well, by holding Federal Reserve notes, or dollar bills as they're called as well, you're supporting these people here, the Fed. By holding precious metals and not feeding the creature from Jekyll Island, you're supporting yourself. Yes, they don't want the bottom 50% to support themselves. They want them to stay in this game. And even also the people from 50% to 90%. They don't want them abandoning the paper game, and not even the top 10%. They want the top 10% also to stay in the game, or else if people don't play their game, the game ends. And that's the way I think about it. And that's why, yes, it's frustrating to see precious metals being kept under the thumb as they are right now, especially with the dollar going down quite a bit versus the fiat currencies. But I think this is just temporary. So it's 8:25 a.m. London. Gold is at 1721 versus the dollar. It's down 6 or a third of a percent. Yeah, silver, they've brought it back down below 18. It's at 1783, down 23 cents or 1.3%. Maybe just a little bit of a correction, even though I'm sure JP Morgan and the other bullion banks are busy out there. The Dow is up another 140 this morning. The Dow futures up 0.5% at 25,870. S&P is up a third at 3091. As I said, the fiat currencies are stronger. The pound is almost at 126. It makes you wonder why people would want pounds. They're talking of even more funny money and fiscal stimulus here. Bank of England is going to continue to print money. This is a great opportunity to get out of paper, in my opinion. Euro is up above 112. It's at 112.24, up 0.5%. And the dollar is unchanged versus the yen at 108.68. Crude oil up 2.5% at 37.81. So it looks like all's well with the world. No one's talking about the health crisis. They're just talking about rioting. But last I looked, we still can't travel around the world. Not only here in Europe, but Americans as well. Big and small business have been shut down for like 3 months. And all of a sudden, people think everything's going to go back to normal. I don't think so. So let's quickly look at the 10-year yield. You'd think with this recovery in the stock market, in crude, in the supposed expectation that everything's going to be fine, I would say the 10-year yield should be back above 1%, but no, we're still stuck around 70 basis points. So, yeah, markets, unfortunately, As Keynes said once, and this is one of the only statements that I think Keynes made that makes any sense, because I totally disagree, of course, with his globalist approach of managing economies and having governments interfere. But he said once that markets can remain irrational for longer than you can remain solvent. And this is, I think, a case of that right now. So there you go. Don't order a dollar milkshake. Order a gold milkshake. It tastes a lot better. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.